So for NFP, right? There's some things to consider when it comes to NFP. Not I'm not talking about FOMC or when a Fed talks or um, whatever all the other ones are, right? I'm drawing a blank right now, but whatever all the other big red folders are, I'm specifically catering to NFP. NFP is it trades differently than all the other red folders because it likes to attack um, a previous day high or low. It likes to attack weekly opens, right? A new week opening gap. Like it likes to attack certain levels, but what it does before is it creates liquidity on both sides, right? Like we have liquidity up here and down here. So what happens on Wednesday and Thursday is we generally create a really nice range for NFP to take both sides out. So, and like I said, NFP, when I like to um, do a daily bias on NFP, I like to always do it the same exact way, right? Because remember what I said last time, news just speeds up price. So if we're in bullish structure, I want to see NFP continue that bullish structure, but I also want to see us tap something and reverse. I'm a big fan of trading reversals, right? So I like to anticipate reversals at key levels. I want to anticipate a reversal here, which happened, right? I want to anticipate a reversal here, which happened, right? I want to anticipate a reversal at Asia high. Didn't happen, right? It didn't happen, but I also have a way to combat that with the frameworks that I taught during the Asia video. So since I didn't get my 3 drive right, and I didn't fall back into Asia range, I know to anticipate what a different framework that's going to bounce, and it'll help me ultimately be a better trader because I can anticipate the non-reversal days, right? The continuation. But when it comes to NFP, when we do our daily bias, I like to continue with where I left off, right? If you remember when we did the daily bias on Sunday, I anticipated what? The market to take out all-time high and to continue higher. I wanted to see us take out all-time high. I think if I remember correctly, I said like Wednesday, and we ended up taking it Tuesday after market close. Like after market close, we took the all-time high. I think it was like right here, I think on Tuesday, right? Like we took out all-time high. And then after that, it was just continuation, right? Overnight, we went up to 200 points. And then yesterday, we kind of just played around, took the high out and dropped, right? We did what's called a seek and destroy profile where we take the high out and the low out and the high out and the low out and the high out and the low out. If we look here, right, we took out the high, then we took out the low, then we took out the high, and then we took out the low, right? And then right now here, we took out the low again, and what I'm anticipating is for us to come and take out the high. So going into NFP, right, there's a couple things that we need to look for. London, right? A lot of times what London does on NFP days is it creates the high and low of day. So we can anticipate that whatever London low or London high, it's going to be the low of day, right? Again, the low of day or the high of day. Let me drink some juice. My voice is getting raspy. We can anticipate London creating the low or the high and trading up to liquidity or down to liquidity. So if we're looking at London to create the low a day, then we can anticipate NFP to come up and take all-time highs, right? According to our chart, we can anticipate London low being, and this is just an example, this is going to be London low. We can anticipate NFP taking the high out and creating the same thing as the lunch model, taking the high out, trading back into the range, right? Creating that market structure shift where we can enter on a fair value gap. Now, if we anticipate London being the high a day, right? This is London high a day. We can anticipate NFP dropping to take out the low that was created overnight and then trade back into the range and come back and take out all-time high to go higher. So NFP likes to create a double purge where it takes out the low and it takes out the high, or it takes out the high and takes out the low. But what's important is where London closes, right? If we close here on London or here on London and we start trading higher, our next point is going to be what? The equilibrium. When we break equilibrium, we can anticipate this bad boy, right? If we trade into equilibrium and we fail on equilibrium, we can anticipate what? Us trading into this bad boy right here. And another thing to consider is that NFP does continue, right? There's a continuation on NFP. There is a possibility of always a possibility of us taking the high and going higher, or taking the low and going lower. But again, I like to trade reversal. So my anticipation for tomorrow is I want to see where London takes us during if price takes us above or below equilibrium. If we trade and fail to take equilibrium out, I'm anticipating us to hit discount, and then again NFP to come up and take us out, and then trade back lower. If we trade through equilibrium, I'm looking for NFP to continue I'm looking for us to trade up higher, NFP to take us down, to take out this liquidity, and then to go higher. So for me, it's all about equilibrium, where equilibrium goes. Let's see. I was just reading the chat. So we'll map out a couple things right now, but there's a couple other things that we need to identify when it comes to NFP, right? NFP, like I said, it likes to grab previous lows and previous highs to reverse. It likes to drop down to that liquidity to go higher, or it likes to go up to that liquidity to bring the market lower. Now, remember when I talked about news, I said I really don't look into the analytics of it. I really don't care if jobs are higher or jobs are lower or whatever, right? Well, with NFP, like I said, NFP is a totally different monster. Well, when it comes to NFP, I do like to look to see what we think the market is going to do because of that non-farm payroll, right? If jobs are low, or if jobs are high, we can anticipate inflation, right? Because everybody has a job, everybody has money. If jobs are low, then we shouldn't anticipate an inflation. We should anticipate kind of like a stall, or maybe them saying they're going to take it lower. And what that's going to do is that it's going to create buying opportunity in the market, right? When we have a lot of jobs, everybody has money, so there's tax hikes, right? More taxes. When there's not a lot of jobs, the economy doesn't have a lot of money to put back in. Everybody does not have a lot of money to put back into the economy, so then we can expect the market to, for people to buy and hold, right? We can expect people to buy and hold to drive the price. So I like to look at that. And I have a note that I wanted to read, and it's exactly what I just said, but it was a note that I took off of ChatGTP the other day. So if we anticipate a slowdown in job creation compared to prior months, it can raise, it's going to raise the jobless claims, right? Which is going to be the risk of a sell-off, right? And then there's another one that they call the risk of a rally. So like I said, a lot of jobs, more taxes, not a lot of jobs, less taxes. So the more jobs, the more people are going to liquidate, which is a sell-off. The less jobs, the more people are going to buy to hold their capital. So that way their money is kind of just set, right? There's also something to note when it comes to what I just spoke about. When there's more jobs and there's a risk of tax hikes, then gold and oil will go higher. Because if you buy gold and oil now, right, and there's a tax hike and gold goes up, your money, you make more money. If there's a risk, of dropping, of the market dropping, you buy gold. If there's a risk of the market going higher, then you're good to trade NQ to look for higher prices, right? And again, we just want to look for buy side and sell side liquidity. We always look for liquidity in our trades, but we just want to make sure that we just want to make sure that we anticipate the correct levels are being hit. So for tomorrow, the market's going to go up or down, right? So if we break the highs, I'm looking to go lower. If we break the low, I'm looking to go higher. Just your typical ICT reversal, right? Go up, grab the liquidity, come back down. Go down, grab the liquidity, come back up. So we'll go into the daily bias. Hopefully some of that made sense. I know I kind of rambled on a little bit about the job reports and stuff. I think everybody is just anticipating NFP to drop us because of how high we are. But for me, it really relies on the previous day. The previous day, and then after the previous day is going to be the weekly range, right? Not the previous week, the current week, the current weekly range, and then if the monthly has some key levels that are right next to it, those can be potential targets. So we'll start off on the 1 week just to map out our high and our low, because again, NFP likes to take out or bounce on those specific targets. So we want week high, we want weekly high, right? And we want weekly low. This is our weekly objectives. This is our if we're bearish, this would be our ultimate target for tomorrow, right? A crazy sell-off. We'll go to the 1 day, and we know that, we know that this is the week, right? This is the weekly high and the weekly low. So if we map it out, we definitely want equilibrium, right? We definitely want that weekly equilibrium. So if we use our our magnet, this is really close, right? This point here is super close with the equilibrium. So we have our weekly target, right? And then your weekly and your daily is the same. Here's your daily low, right? That's your daily low. Then we have our daily equilibrium. So we'll change our daily to a different color. So our daily is going to be green, right? That's our daily low. Our daily high is the same as our weekly. Now, it's important to identify that when we have a daily high and a weekly high and a monthly high, right, which does happen, all in the same level, there's more liquidity generated there than there is here. And the reason why is because those key levels align together, right? You got your monthly high, your weekly high, your daily high. All-time high has the most liquidity, and price loves to grab liquidity, right? So that's why, like I said, if we drop down, I want to see us give it all back and come attack all this liquidity here. If we go higher, right, I want to see us drop back down, because again, this is where all the liquidity is. This is where all the breakout traders have buy orders so that they can get grabbed on the way up and go higher. But I want to see us grab it and drop lower, or drop lower and go higher. So we'll go to the 1 day equilibrium, right? Again, I love the equilibrium. So we're going to go here. We're going to do the 1 day EQ. All right, we'll get rid of this bad boy. And then we're going to go to the 4 hour. Right, we're going to look at the 4 hour, and we already have our dealing range, right? Remember, our range is just from the low to the high. So we already have our range that we're going to trade in, which is this one here, from this high to this low, because we've traded up. Our range before this would be down here. Would be down here all the way to up here. We can get rid of this. This is the weekly. So we now have our dealing range. Right, this is where price is going to trade in for overnight session. We're going to trade within this range. And this is why I was explaining it's important. If we take equilibrium during London, I want to see us continue to premium. If we fail to take equilibrium, I want to see us continue down to discount, which is what? That daily low, or I want to see us trade back even lower down to this, which has engineered liquidity. Take out EQ. This is possibly where NFP will drive us higher, because we got to engineer liquidity in order to pump. As we drop lower, right, what we're doing is we're engineering liquidity, and then when we get enough, we take out a key level, take out the last of the stops, and then we end up creating what everybody calls the V recovery, right? We create that downtrend, and then within 2, 3, 5 minute candles, the 4-hour move down just got engulfed by 3 candles, right? So for me, it makes sense. Like I said, if we fail here, we kind of just play around during London, and then NFP spikes us up. So we have our dealing range, our monthly, weekly, daily high. Again, a lot of liquidity, weekly equilibrium, weekly low. Then we have our daily equilibrium, daily low, and then we have our 4-hour dealing range. Now we look at our structure. Obviously, we're bullish. I like, and you guys should know by now, I like price to come down to equilibrium to go higher. I love when price creates an uptrend and bounces off EQ. That lets me know that price is on a continuous strong uptrend, right? So for me, for tomorrow, if we do drop lower, I would love to see us drop down to this liquidity pool here. And if we go higher, obviously, overnight, I want to see NFP take us higher and drop us down. What I'm leaning towards, right, is a drop to previous day's EQ and then go higher. This is what I would like to see happen tomorrow for NFP, for overnight, and then for NFP, right? Overnight, I want to see us drop, and then NFP, I want to see us grab the last of this liquidity and go higher. My turning point, right, like where I'm going to go from bearish to bullish overnight, is equilibrium, right? If we trade above equilibrium, then I'm no longer looking for this scenario. Then I will be looking for taking out high a day, and then NFP dropping us down to equilibrium, and then coming right back up. So my analysis, or the measurement of the market that I want to see, is regardless if we take out equilibrium overnight, I want to see us come back down to this bad boy, right? And I want to see us hit that weekly equilibrium, which falls in line with this little accumulation balanced price range, which also falls in line with our higher time frame market structure. And like I explained, the news likes to create a bullish, likes to follow structure, likes to follow suit, right? We have a nice uptrend going here, and then I would like to see us just continue that uptrend. Do you guys have any questions? My red EQ is based off of the weekly candle, current weekly candle, not last week's, current. Yeah, it's the weekly EQ. The current range. So there, I don't know if I posted the video, but there's a video, there's a concept that ICT talks about. It's called the central bank's dealing range. He calls it the CBDR. So what it is the current range that we're trading. If you put it into like easy terms, right? This would be our previous range. This would be our current range, right? So this is your PD array, your previous day, previous week, previous month, previous whatever, right? Your PD array, your previous dealing range. And then the next swing that it creates, right? This is the current range, or the previous, this is the current range that we're trading in. So as we have today being made, right? This is Asia. The low that was created and the high that was created, let's say we're trading in here. This is the range you want to look out for, because this is the range that, according to ICT, that the banks are using as institutional levels. Here's your premium, here's your discount, and here's fair value, right? So even though we have this range here, right, we're going to say this is our swing high to swing low. This is our, we're going to say it's the weekly candle, the daily candle, the monthly candle, whatever you want to say it is. But we have a swing created inside of the range. This is what, again, according to ICT, that the banks are using. The banks are using this range as navigation to break out into this range. So what we have going on here, and that's why I use the 4 hour, right? What we have going on here is the latest swing that happened on the 4 hour, which was high to low. And this is where I'm anticipating that big money is looking at. This is the range I think they're looking at. I think they're looking at this range. I think they're looking at the weekly candle. I think that they are going to generate liquidity, which is here. Then they're going to engineer liquidity, right? They're going to take it out. Then they're going to go use it as a crutch to go higher. But the central bank dealing range, right? It's literally just the current swing high, the current swing low, the current session high, the current session low. So CBDR is not really something you need to really look into. It's not confusing. It's just a whole nother zone inside of a zone inside of a zone. But that's why I like to only use the 4 hour. Yeah, it's a lot, but when I'm confused on price, I like to drop just the Fibonacci from or the PD array just from the 4 hour high to low. And if we break above that equilibrium, I'm bullish. Below it, I'm bearish. This is what I like to use as my turning point, right? As where to change my bias. If I have a short bias, and price keeps taking me out, then not gonna trade. I'm gonna wait. I'm gonna wait to see where price wants to go, and if it trades above my equilibrium of my CBDR, or like I said, of the 4 hour range, then I'm gonna flip to longs, and I'm gonna look for long plays here. Yeah, the number one thing that I look for, but that's all I had for NFP. If you guys have any questions about NFP, that's really what I want to see happen. Like I said, the equilibrium of this range is my turning point. If we fail to take equilibrium, I want to see us drop down to here, possibly to here, this big fair value gap with NFP, and then go higher. If we break above equilibrium of this 4 hour, which is 21,486, something like that, 21,486, then I want to see long plays play out. But that's really what I got for NFP. Just continue that uptrend. I don't think we'll break structure and trade back into this range, because this is where we fall. This is where we could potentially, fall back into shorts. So for me, it makes sense to tap into it, right? And psych everybody out to make them think we drop back into this range, which is the Trump rally. I think this range was the Trump rally. You know, if we break this, we fall back into this range. So I think we'll break into it and psych everyone out and go higher. But we'll see. I'm gonna stop recording because